Welcome to the Q News Economic Show. Now, with the IEA forecasting a 3.85 million barrels per day surplus in 2026, are we heading for a prolonged oil glut, or could OPEC Plus production adjustments prevent a price crash?
Yeah, I think that OPEC Plus was one of the reasons this surplus is happening in the markets. It is, they are now rectifying themselves in the market, and of course we will see oil being more free in markets. We have seen around 2.5 bpd in our current year, and so even if there is some kind of that they are going to postpone it for the next year, it will just be postponed for some kind of quarter, and this will be good for some of the countries that want to get better and yeah.
Mm-hmm. Well, how likely then is OPEC Plus to maintain discipline under the internal competition from members like the UAE, and what would a breakdown mean for global oil prices?
It is very likely, especially after the latest conflicts and the influence from some countries that's been happening, or people competing for influence between UAE and Saudi Arabia, and so we expect new conflicts, especially that UAE have been requesting an increase in their production, and they got more than what they wanted before. But yeah, I think that it is one of the likely scenarios in the upcoming period. Yeah.
Mm-hmm. How could the U.S. sanctions, a potential Venezuelan oil blockade as well, or tensions within the Middle East influence 2026 prices despite the rising global supply?
Yeah, all of these incidents have gotten worse actually. There is some kind of downturn between Russia and Ukraine, and it is not likely now, especially after Russia claimed that Ukraine has attacked Putin's residents in Russia. And yeah, they have been targeting energy institutions in Russia. Of course, Ukraine has been doing this, and then also the new conflict in Yemen that shows that there will be escalating tensions in the upcoming period after we've seen what Saudi Arabia has done, and they have provoked the UAE. And the last response after Saudi Arabia has asked the UAE to withdraw from Yemen within 24 hours, and yeah, the UAE has actually withdrawn, and they have declared this. And on another hand, of course, the threats on Iran, things aren't still stable between Iran and Israel, and Iran has actually responded to Trump's statement that he will support Israel if they need to strike Iran, if Iran rebuilds their nuclear program. When we talk about Venezuela, of course, they are still sanctioned, but we can see that despite of all these geopolitical tensions, oil price is still high, but it may get less actually, especially by the start of next year.
So with all these geopolitical tensions, do you think they will cancel out the oversupply of oil and thus keep the prices steady?
Actually, there isn't much effect on the prices, and it is because there is surplus of oil in the market, and of course there is a very clear reason that oil is keeping its current price. It is because balance between supply and demand, and then there is also surplus, and so one of the main principles principles in markets is what I've talked about. But this doesn't mean that any tensions, especially in oil production areas, will actually affect greatly on oil prices.
Well, what about China? It has been stockpiling large volumes of crude. How does this OPEC demand impact global oil prices and market stability?
Yeah, of course. Since 2020, China has been hiding their stockpile. They don't talk about it, but I don't think that they have more than 500 million oil barrels. And then also China has been depending heavily on Russian oil now. And by the way, today actually the Russian ships that were delivering oil to China have actually faced some kind of turbulence because of bad weather in the Black Sea. And but yeah, still the customs aren't affecting oil. The customs that were imposed by Trump after the truce, they don't have that much effect, especially now. It's not the same as before, and it is expected for China to have the largest percentage of oil demand, maybe even more than half the demand percentage.
Sir, are major oil companies using the expected 2026 downturn strategically to invest in future projects? What does this reveal about how they see oil demand evolving over the next decade then?
I think that there is some kind of crisis that will be in the market, especially when it comes to investing in oil. Of course, not investing that much, and then also with low prices will cause some kind of but I don't think that this will happen in some countries like the Gulf countries that keep actually fueling their institutions and companies that extract oil and produce oil, or we're trying to locate new places to get oil out of. But this will be such a problem for companies, especially European and American companies, especially if prices go down, which is expected actually.
Mr. Shobeki, which key indicators, floating storage, inventories, or something else, should investors and our viewers watch to understand whether the market is oversupplied or balanced?
First of all, let's look at the demand market and the international economy. Let's see what's going to happen with America when it lowers interest rates, and of course this will affect international economy and on demand as well. And then we also need to look at the at what's the market, how will production go outside of OPEC, of course, or from countries like Latin America, Brazil, Canada, Norway. And also we'll see what OPEC will be doing with increasing production. Of course, this will determine prices in the upcoming period, and we cannot forget that any tensions, geopolitical tensions, of course, will affect prices as well.
Yes.